Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance. We'll also take a look at some volumes as well. Ryan, it's great to see you as always. Let's jump right into your first chart and take a look at the weekly performance.
Thanks, Jill. As always, great to be here. A pretty good week for QQQ and QQQM, up 1.6%, versus the S&P 500 up 0.5% for the week, and S&P 500 value down 60 basis points. I brought that volume chart in just because it's been light. I think when you look at month to date from the end of May, QQQ's averaged just under 30 million shares a day. But if you look at from the end of 2020 through the end of May, QQQ saw nearly 47 million shares trade per day on average. So I think it's either a combination of heading into the slower summer months, or investors awaiting today's Fed meeting. And in that Fed meeting, they maintain their target rate at 0 to 0.25%. Maintains the $120 billion pace of bond buying until substantial further progress has been made on both employment and inflation. The biggest change really came in projecting the Fed liftoff. So we have 13 of 18 Fed officials favoring at least one Fed hike by the end of 2023. Only 7 Fed officials back in March saw that timetable. And 11 of the 18 saw at least 2 rate hikes by the end of 2023. There was a lot of noise in the press conference, and that's all taken place in the last half hour. So I tried to jot down at least some of the key points that I saw. Powell said that monetary policy is going to continue to very powerful support until the recovery is complete. Until then, the recovery is incomplete, and risks still remain. He pointed to employment. Labor participation rate remains low. That could be coupled by, or at least fueled by, enhanced jobless benefits that are set to expire in September, along with child care concerns that could be playing some of the employment figures. A lot of attention around inflation. From Powell, longer-term inflation expectations appear to be in a range consistent with the Fed's goals. They'll be prepared to adjust policies should that path of inflation or longer-term inflation expectations move materially, beyond levels consistent with their goals. At that point, you started to see rates jump even further than they already were. I think the 10-year was up at around 1.58% at that point. He did note that inflation has come in above expectations, but that data is showing that it's categories that have directly been affected by the pandemic. They're the ones that are seeing the biggest gains. And before I logged off to jump onto to our call here, Powell did note that long-term inflation expectations are anchored and what he believes are in a good place right now. Lastly, I'll end with some of the tapering conversation. He reiterated that the committee is going to update the public on the progress made towards its goals, give plenty of advance notice of any plans to taper. But I think that this quote kind of encapsulates what's been going on. It's not a time to try to reach hard conclusions about the labor market, about inflation, about the path of policy. That data will determine the outlook for tapering. So, sort of saying a lot without saying much, but really the Fed is going to continue to be driven, and I think it's going to take a day or two to digest everything from the press conference.
Well, Ryan, I guess the question is, everyone talks about if the market will have a taper tantrum, should we see a shift in policy, should we see them dial back on bond purchases, but why should the market have a taper tantrum, if you want to call it that? We know it's happening, it's being telegraphed. Should it happen? It's not like this was never a part of the conversation or a part of the narrative.
No, you're absolutely right. I think they've been very consistent in that language over the past number of months, saying, hey, you will have plenty of advance notice, right? So there really shouldn't be this huge shock to the market. I mean, the writing is certainly on the wall. I mean, it is forthcoming. I think, it's just a question of timing. So I agree with you.
And Ryan, to wrap up here, let's take a look at your last chart. Let's dial down a little bit more in terms of sector performance within the Nasdaq-100.
Yeah, so for the week in Nasdaq-100 and QQQ, all 7 sectors ended up in positive territory. Whereas if you look at the S&P 500, you have financials and materials trading lower by over 2% respectively. Industrials also traded lower by 1.3% in the S&P 500, but it was actually positive 38 basis points in QQQ. But for the week, we saw a nice bounce back from technology. It was up over 2%, really led by overweights Apple and Microsoft, which each advanced by 2.29% for the week. And also Adobe up nearly 8% for the week. I think some optimism around earnings. So Adobe's scheduled to report earnings tomorrow afternoon after the close. You saw upward price target revision this week. You saw some positive analyst comments, specifically around digital media and digital experience, kind of referencing just a broad-based strong environment across digital marketing on the whole. So we'll keep an eye out for Adobe earnings and of course any update from the Fed for next week.
All right, Ryan, sounds good. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.